Hello class and welcome to our 8th lecture series on Managerial Accounting, and I'm your instructor Jamal Haider. So our midterm exam is scheduled on 10th of November. So how many lectures, how many chapters are going to be included? So till today what we learn in this lecture, till variable costing, right? So let's do that. Before that, I have a practice questions for you guys for regarding CVP analysis. So I hope you already aced that. So those who are watching the video, please pause and try to solve it and compare your answer with it, right? So I have pasted a couple of questions for you to further practice and get grip on CVP analysis. Here we go. We have one more question in which we are asking it for computing these margin of safety. Here its answer here. We have one more. And all you need to do, pause the video, solve it, and then compare your answers here. Right? Okay, let's move forward. We have one more. All you need to do, pause the video, read the question, try to solve by yourself, and then compare your answer with the solution file, a solution answer slide here, right? One more, in which you have to find out the break-even points for multiple products. Like we have two products, Flight Dynamic and Sure Shot. So it's here, and here it's answer. Oh, I think I should. Okay, I will be pasting its answer here. Okay, got it. So I would be uploading the solution file of and pasting this in our PDF lecture as well. So please don't worry about that. Here we go. So we are starting chapter 7, which is variable costing. We just completed the contribution margin approach, and we talked about its implication in CVP analysis, cost volume profit analysis. So we already know the what is the variable cost, what is the effect of variable cost on profit, right? So let's connect those analysis with this variable costing. So let's talk about its importance, how it is used as a tool for manager. Okay, our first learning objective is explain how variable costing differs from absorption costing and compute unit product cost under each method. So absorption costing, which is traditional costing, in which we talk about the direct material, direct labor, manufacturing overhead. We do not segregate whether this is fixed or whether this is variable, right? Under variable costing, we only take variable costing stuff. That's it. So let's just talk about absorption costing. The other name of this method is full cost method. It treats all of the production as product cost. So it does not segregate whether the nature of that cost is, or the behavior of the cost is variable or fixed. So since there is no distinction is made between variable and fixed, so our CVP computation baseless. So that factory who is using absorption costing or full cost method, they cannot make scenarios based on CVP analysis. What if we change the fixed cost? What if we change the variable cost? What if we change the sale price and change the variable cost? What will happen to our profit, right? So under absorption costing, CVP analysis is not applicable. You cannot, we need contribution margin. Contribution margin formula is sale minus variable cost, right? The third point is under absorption costing, the cost of unit product consists of direct material, direct labor, and both variable and fixed overhead. Variable and fixed selling admin expenses are treated as period cost, and they are deducted from revenue as incurred. So we have manufacturing costs, we have non-manufacturing costs. Non-manufacturing costs are selling and admin. Manufacturing costs are direct material, direct labor, manufacturing overhead. So since we are using absorption costing, so we are not considering the behavior of the cost. So direct material cost is cost. The nature, we don't segregate. Direct labor, it is the cost. Manufacturing overhead, it's a cost. So we are not dividing it into fixed or variable. Similarly, with selling and administrative cost, we are not dividing it into variable and fixed, right? So it means period cost going to be non-manufacturing cost, selling and admin, and product cost going to be direct material, direct labor, and manufacturing overhead. That's it. Variable cost, we also call this direct costing or marginal costing method, right? So it means we only treat variable cost as product cost, right? So it means we do talk about the behavior of the cost in variable costing. So what is the behavior of direct material? Variable. Why? Because the production increases or output increases, direct material also increases. So nature is variable. So that is a part of product cost. Direct labor. If you make more products, you employ more workers. Daily wages worker, right? So direct labor is basically daily wages worker, which are related to production, right? So it's a variable cost. Manufacturing overhead. So that part of manufacturing overhead which vary with the level of output. So fixed part is not going to be included. So it means there's a difference between absorption costing and variable costing. That is the absorption costing treated, absorption costing treat all the manufacturing overhead, but variable costing is treating only variable part of the manufacturing overhead as a product cost. So the cost of a unit produced consists of direct material, direct labor, and variable overhead. So unit cost gonna be, or product cost gonna be, let me write it down here, product cost. Under variable costing is direct material plus direct labor plus variable manufacturing overhead. That's it. And what about the period cost? Period costs include fixed manufacturing overhead and both variable and fixed selling and admin expenses. So if I just erase all the mess here, just read this line. Fixed manufacturing overhead and both variable and fixed selling and admin expenses are treated as period cost, right? So that is the difference between variable costing and absorption costing. So which cost is higher? Variable costing or absorption costing? Of course, absorption costing will be higher. Why? Because it does include fixed manufacturing overhead as well. So here our analysis and profitability changes. Let's just see that. So it's a recap that according to absorption costing, product costs include direct material, direct labor, and both manufacturing overhead. Period cost is both variable and fixed selling and admin expenses. But variable costing only considered variable cost as a product cost. So direct material is a variable cost. Direct labor is a variable cost, and variable manufacturing overhead is a variable cost. Right? So fixed manufacturing and both selling and fixed, variable and fixed selling and admin, they are part of period costing, period cost. Chandra, understand?
Yes, I do.
David, Min, Christine, Aroni?
Yes. Yes.
Good.
Yeah.
So if you understand that, let's talk about the illustration, and let's apply all these variable costing techniques on this illustration. So we have how a company produces 25,000 units of a single product. Variable manufacturing cost total 10 per unit. Variable selling and admin expenses are 3 per unit. Fixed manufacturing overhead for the year is 150,000 and fixed selling and admin expenses are 100,000. Right? Now, let's talk about this. Basically, this is the data that is given. So they annually produce 25,000 units. Variable cost, they already mentioned us that 3 is variable selling and 10 is the variable direct material, direct labor, and manufacturing variable overhead. While the fixed are fixed manufacturing overhead 150,000 and selling and admin fixed expenses are 100,000. So can we calculate the unit cost under both method? Yes. Let's see that. So under the variable costing, only variable